All right, good morning. Monday, gosh, September 29th, busy weekend, lots going on. I got a certain feeling about this one. I got to be honest, I have peeked ahead. I'm very excited today. So we're going to go ahead and get straight into the numbers, but want to let you know we also have Pierce Sperling with us with Highland Mortgage. Pierce was on about a month ago, and a lot of you guys loved it. A lot of you guys have spoken with Pierce since that time, and I figured with everything that's going on in September, all the news about rates, the rumors, all that stuff, let's just bring him in and talk about it. But let's get to the numbers so we can get to Pierce and find out exactly what's going on. So here we go, guys. You might feel my excitement, but I'm going to show you exactly what's happening here. All right, new listings 34. That's lower. That's kind of what I was expecting through the last 2 weeks coming off of Labor Day. But we were still up around 40. 34 is trending down. Love to see it. I would love to see that hold throughout the fall. Fingers crossed, especially as we work through October. But here we go. Pending 36. Guys, for anybody that's been watching this for any amount of time, and I'm going to call it 2 years on my end, that is the first time that the pendings, the written contracts, have been higher than the inventory amount. And all this time, if you remember, there was a time 6 months ago, we were celebrating if we were 50%, meaning if we bring on 40 new listings, we hit 20, that's driver's seat for us. We're chopping away at that inventory. Now we've got the first time the pendings more than the new listings. I felt it. I tell you guys, I judge it by the phone. The phone had been ringing. I told you guys the offers we were making last week. Now, let's not get confused. Sellers, be careful with this news. This does not mean run to the market and try to get the high prices you were trying to get or the reason you left the market. I think this is because of what we're going to talk to Pierce about in a second, but also because most of the sellers that are getting the deals done have gotten very realistic about the pricing. We're in a good place right now. So my warning is don't mess that up. If you're sincere about selling, it's a really good time to get that price right and put it out there because the buyers are coming forward. Closings, look at this, guys, 36. So let me repeat this. New listings 34, under contract 36, closed 36. I think that's the most closings in a time period we've had. I'm not going to ask Maggie to stat check this, but I don't remember saying 36 closings. So that's as consistent as you can get. Price changes 63. That's very much on par. But what we're celebrating today is the first time we've written in a 72-hour window, that's the week that was, more contracts than properties that came on the market. So I'm pumped up. I mean, that matches kind of what we've been feeling out there. We always, we try to temper our expectations, but I'm going to go straight in here. Pierce, man, I know you've been over in I call it the virtual green room. I know you heard all that, but, let me ask you this before we get into Fed and September and all that fun stuff. Is that my phone's been ringing when you hear me see me fist pumping on new contracts? Is that kind of matching maybe your phone call level? I mean, what's the energy you've been feeling, and is that news surprising on your end?
Yeah, I mean, I think from the last couple of weeks, that activity on our side has been tremendous. It's been great. I mean, a lot of phone calls, a lot of text messages, people coming off the sidelines a little bit.
Mm-hmm.
I know we talked about interest rates and what they're doing. And even with the Fed lowering rates a quarter, that was already baked into the rates for the mortgage rates. I mean, there was like a 90% chance that they were going to lower rates. And they've known that for 45 to 60 days.
Okay.
But it doesn't hurt. I mean, because it gets it out there in the news and everything else. But there's a misconception of what that means from a lowering of rates. When the Fed lowers rates, it's a Fed funds rate. So that's the prime rate goes down, which helps with equity lines. It helps with credit cards. It helps with maybe car loans, and it helps with commercial loans and stuff like that. It doesn't have a direct correlation to mortgage rates because the banks and investors have already priced it in.
Yeah.
But what's more important is what the Fed said the other day.
Right.
And what the Fed said was that they may lower rates 4 more times this year. and only once next year. So that's good for all the markets really that's out there. The main thing from a rate perspective is jobs. And so this week we have jobless claims is on Thursday, and then new jobs is on Friday. So September jobs report is coming out on Friday. And that's going to be a big deal because that's going to be the economic data that the Fed uses in order to determine if they're going to lower a quarter or half or none. So I think, the 10-year treasury is kind of what we use from a rate measure. And it's like 4.15, which is good.
Yeah.
Rates did go up a little bit after they raised rates, but it was pretty minuscule, as a consumer's concerned, because we watch it in eighths of a discount point and not an eighth in rate. So,
okay. Yeah. So I got two follow-ups. So first is, that it was interesting with the news because in your world, it didn't mean that you were calling people going, hey, look at this rate now. You guys were kind of speaking that language, So I felt like, and you correct me if I'm wrong, weirdly enough, even the people that came forward that seem optimistic about the news, a lot of it was decently cash heavy or financing. Maybe, they're putting a lot of money down, so it wasn't like it wasn't like this new breakthrough rate news. I think it was just confidence in where it's headed. Does that make sense? And, and I felt like there's some people out here that have been doing real estate for a long time that if they know that it's going that way, and they're a buyer and they're maybe not so rate sensitive, maybe they try to get out ahead of it because they think that that's going to spur people into action and it might get a little bit more competitive. Does that make sense on your end?
Well, 100%. I mean, and I think what ends up happening when rates go down, that's going to release some of these buyers that are on the fence, which then means that you have more of a competition at certain price ranges, which now means that prices are going to go up on houses. And I think me and you have been saying this for a long time. Like if you have more people that want to buy that price range house, then you're going to have more competition and there's less inventory.
Yes.
And we know that. I mean, if you look at the sheets, like you said today, I mean, more contracts, more closings than listings. I mean, new listings. I mean, that goes to show exactly what we're talking about. And the people that want to wait around for interest rates to go down, they're not going to go down that much lower.
Got it.
I mean, and I think me and you talked about this. I think in the last 50 years, rates have been below 5.4% twice if it wasn't a time of war or pandemic. That means a lot of bad stuff has to happen in order for rates to go down.
Right.
6% on a 30-year fixed loan is normal. It's very normal. I mean, and it's a good rate, to be honest with you.
Yeah.
I think that appraisals are good. That's what's really good about a lot of those closings. So we don't have that, those appraised values are coming in and they're good numbers.
Yes.
Loan programs are out there for more products, which is really good. Because, the more loan products you have, the more people are going to be able to qualify. And a lot of them, are really good rates. I mean, and I think that helps buyers a lot more is the little more leniency on the mortgage products.
Yeah. No, in my opening statement, when I was talking to sellers, it's like when you see that, you want to say, okay, yes, that is the equation that sellers are looking for. More contracts and inventory coming on. My hesitancy there was to say, not yet. Like we love trends. We want to make it through this fall. This is an equation that we did today that if you're a seller that wants to reach, we need to make it through the fall with this kind of activity, or look around at your neighborhood. If it starts getting gobbled up, that's the time to kind of take a peek. But the news about the interest rate, they do seem focused to the end of the year, Pierce, to want to take action and drive that on down. I mean, is that kind of in the banking world? I mean, everybody, like you said, things get baked in. When do those actions? I mean, if you're talking about 3 or 4 moves, we're kind of running out of time. I mean, that's fairly aggressive, isn't it? Kind of rolling out the year with 3 months left to be kind of making those
Yeah.
moves as
I
we
mean,
roll
you
out.
also have a new Fed, head of the Fed coming in next May. So, I mean, I mean, that's a big news as well. And I
Yeah.
think this past weekend, Trump just texted something about Jerome Powell that he's getting fired, which wasn't, very good. But, you know, so I think there's some of that uncertainty. I think the problem from a rate perspective is the economy's good.
Yeah.
And for the most part, and that's a good thing.
Yeah.
The big thing is jobs, and that's where people, if they have a job and they feel confident in their job and they're making more money, then they buy houses.
Yeah.
And I think for what me and you do, is we're trying to guide people into the right financial situation.
Mm-hmm.
So with rates going down, stocks, bonds, and those will not be as attractive as real estate's going to be with rates going down,
Mm-hmm.
because you're not making as much money on your money. And so you move it over into real estate, and then you throw in the capital gains and the depreciation and the bills and all that. And from a tax savings, real estate starts to make look a lot better.
Yeah.
The other thing that happens too is that, when rates go down, the rates on investment properties go down,
Mm-hmm.
second homes.
Yes.
And when those are in the sixes, that's pretty good.
Yeah.
And that's where we're at on that. I mean, with our FHA and VA and conforming, we're almost at 6%.
Yeah. And Pierce, we talk about this. That's been the market that's been lagging, is that true investor market. We've been helping people with a lot of second homes, a lot of move around primary, a little bit of investment, but they've been waiting on that equation. And a couple of things are going in their favor. One is rates. Two is the stability around the rental market. It's leveled off to a point where people are getting predictable. And then also, we talked about this last time you were on, the depreciation aspect. So when you take in all those things to account, I think the ones that are about to have their day are the true investor that's been kind of hanging out on the sideline. They've been the most rate sensitive, rate watching, in my opinion, because it's math formula more so than a lot of these other pockets that we work in down here.
And that's a great segue into, you need to make sure that you do check with a couple of different people on those investment rates, because they vary substantially between each company. One bank may be at 8, we may be at 7, it depends on loan to value. Mm-hmm. Fortunately at Highland, I mean, I focus a lot on investment property. So I know that we have investors that, that rate's a lot lower than some other of the competition. And that's why I went over there, is because I needed that second home condo investment to be more affordable.
Yeah.
And a better deal. I mean, I think you're also seeing some of the condo markets with some of the condos getting their assessments worked out.
Mm-hmm.
And so you're starting to see some of these buildings are going to be warrantable. And so we'll be able to do more lending on them. And I think that's definitely in the 30A area. We're seeing some of the, the assessments get worked out. So
that's right. Yeah. No, we weathered that storm, but, man, we're going to keep doing this. I mean, I know that you had conversations with some folks several folks that had watched this before. I love that. Makes me happy when we bridge that gap, but it's also, you bring a lot of value to them. So we'll make sure and post your information below. So, and I highly recommend this, guys, if you're thinking about it. And this is what a couple of folks did. They spoke with Pearce before they got with me. You know what I mean? I think that's a crucial step because of these things that we're talking about. So if you're one of those and call yourself a lurker or where you are in the timeline, I recommend going ahead and having those conversations so you can kind of get set up and have that right expectation, because in most of those situations, it changed things a little bit. And honestly, in a few, like for the better, maybe, right? On what you think you can do, what you didn't know a product was out there that you can get your hands on. So that's why I like for everybody to get in touch with you as soon as possible.
Well, I think, and I would tell people that as the competition to buy houses, if it gets a little tougher, your biggest competition is going to be cash.
Yes.
So you need to have the financing set up ahead of time, because to be able to close quicker, it makes it easier. Plus, we have the approval letter. Plus, we can also get you pre-approved and not just pre-qualified. So if you know you're going to buy something in the next 60 days, go ahead and go through the mortgage process now instead of doing it while you're buying a house. So you can do it now. We'll get it pre-approved from an underwriter. So all you have to do is technically update a couple of documents and get an appraisal and get title, and you're done. But listing agents are going to start requiring pre-qualification letters as it gets more and more competitive. And if you're going up against cash, you better not have, you're going to be tight on contingencies.
Honestly, we're asking for it, and I'm seeing who the lender is. I mean, to be honest, because I know I appreciate hometown lenders and stuff, but I need to speak to these folks, because I ran into one lately where they just didn't. They were saying some things to me on the condo side of the things, but we've been knowing for years. Does that make sense? Like, oh man, it's tough down there, insurance. I'm like, listen, we've been going through that show this ain't new for us. Like everything you're talking about is 2 years old. And so,
well, you got to be in the condo world. I would not use an outside lender, period.
No, listen, that doesn't have to be a sales pitch on my end. I have lived through it a couple of times. And if they are not dialed in or have gone through it, of late. And to your point, it's gotten a lot better because everybody's made it through their milestones. They've made it through their budget reserves. Look, 2 years ago, we were all in this storm together. And what I'm talking about is so are the lenders. And so we all are kind of coming through this now. And so there's a lot of people that have, it's kind of like anything else with experience. We've rode the waves of budgets being deficient, and now they're getting floored. Like, we understand that. And so, yes, 100%. Agree with that.
And the lenders have started to, at least on our side, we've been able to do more non-warrantable stuff, because the investors aren't as worried, because they look at the borrower and they look at the qualifications of the borrower. So they're not as concerned with the unit as a whole.
Got it.
If that makes sense.
No, it does.
And so having warrantable condos is one thing, but non-warrantable we have all day long. But you just have to have somebody that knows what they're doing, and not somebody that's out of town that doesn't deal in the condo world. Because it will come back to bite you.
Well, I end up working my tail off on those.
Yes.
So, Pierce, man, I appreciate your time. We're going to put your contact below just so everybody can find you. But like I said, or reach out to me and I'll connect you guys. Several people have gone about it that way. So, man, we're going to keep coming to you, because I think that this fall is going to be super active in your world. So it'll be interesting to follow.
Yeah, and I think also from a refinance front, just call me or call your mortgage person and double check to make sure that your mortgage is correct. If you bought in the last 2 years, just get a tune-up and just say, hey, what am I looking at? Because, you may have appreciation in the value of your house where you can refinance and get a lower rate, pull cash out, get an equity line, whatever you may want to get. Because that's one thing where those equity lines, as those rates go down, now you can utilize that house if you need to get cash or pay something off, or maybe tuition, or look at buying another house. I mean, that's the big one.
Right.
I've got clients right now that are doing a cash out refinance so they can buy an investment property here at the beach. And their rates are going down on their house, but they also get the money to pay for the new place. So, something to think about.
No, that's great. That's all good points. Pierce, thank you, my man.
Appreciate
we'll be
it,
back with you.
Sounds good.
All right, everybody. We'll see you next Monday.
Talk to you.
See you, brother.